Joining us right now for more on the trade talks is Michael Froman. He is the former U.S. trade representative. Also joining us to cover the market reaction, Alec Young, who is managing director of global markets research at FTSE Russell. Mike, let me just get your take on what's happening here. We've been trying to read through all of this and determine what's really happening. Are we looking at a de-escalation, but not necessarily a deal that's going to bring a lot of the things that were promised?
Well, remember at the beginning, the administration said they wanted not just to get more sales of pork and soybeans to China, but also fundamental structural reforms. It looks like now we're heading potentially towards a bit of a mini deal for agricultural products, maybe a statement on currency similar to what's been stated by the G20 before, in exchange for not further escalation. It's actually not so much a de-escalation, but to move away from the threat of additional tariffs.
Is this the opening step, though, towards a broader resolution?
I think it's a welcome step. I think it's a welcome step if this changes the dynamic. They've been going at it for about 18 months now. If by at least this mini deal they get back on a path towards true de-escalation, removing existing tariffs, not just preventing themselves from applying additional tariffs, and getting fundamentally to the structural issues, which are the really important ones. Intellectual property rights, forced technology transfer, subsidization of state-owned enterprises. Those are the ones that the administration has said they really wanted to get at. Those are not currently on the table, it seems like, in any meaningful way, but hopefully they'll be down the road.
I was going to say, is that ever something that we can hope to accomplish? Because the Chinese hawks have come out in such a big way about saying, we don't have to do this, we're not going to be kowtowing to you.
Look, I think that's the challenge of the negotiation. Conceivably, the imposition of tariffs and the threat of tariffs increase the leverage of the administration, and now the question is, how do you use that leverage? What can you get for it? If at the end of 18 months of tariffs on $350 billion of goods, we get a few billion more soybean sales, it's great for farmers, that's important, but one we'll have to ask, has that been worth it? Or can we use this kind of leverage to actually get more fundamental change in the economic relationship?
We tried it the other way in the past, and it hasn't been incredibly successful. Do you think that this is going to have more success?
You know, I think you need a combination of efforts, right? You need a combination of organizing the international community to put pressure on China with the European Union, Japan, and others. You need to use all the tools at your disposal, including bringing them to the WTO when they violate their international obligations. You know, back in the Obama administration, we offered to negotiate a bilateral agreement with them where these were elements of it, and we actually were about 90% done with the agreement. So I think you can get there, but the question is whether these tariffs have enhanced the chance of reaching that structural or just created more noise in the relationship that we now have to walk back from.
Alec, having said that, the market's reaction has been one of relief that, okay, maybe we're not going to come to even more escalation on this front.
Yeah, it's always amazing how low the bar has gotten on Wall Street, because I think at this point, with yesterday's rally and the futures up, I think the market's pricing in an announcement later today. But as was mentioned, this is just preventing an escalation to 30% on $250 billion of goods on the 15th from 25% currently. It's not actually getting rid of the tariffs.
Oh, we don't know, right?
We don't know, but I think it's based on the trial balloons that are out there. I don't think anyone's talking about getting rid of existing tariffs. I think that's what you need to really get the market into new high territory.
What would have happened if the vice premier would have left last night?
I think we saw a preview of that in the futures a couple days ago overnight. I think you would have had a major sell-off. So we've been in kind of a trading range, but I think in order to break out of it and make new highs, you really need an end to the existing tariffs. That would be like a tax cut. Basically, something that's weighing on corporate earnings. We're going to go through a pretty weak corporate earnings season starting next week. Companies will probably beat a low bar, but right now
the markets aren't expecting low earnings. So
I think
if you come in with anything less than a 4% decline in
I think
earnings.
the challenge is next year the consensus numbers are much higher. And I think the reason trade's so important is without a deal that ends existing tariffs, it's very hard to believe that the forecasts for 10% profit growth for 2020 are realistic. And a lot of people are haircutting those. And if the Chinese were to decamp and leave Washington right now, I think those numbers might actually go negative. So I think that's why markets are really swinging on every trade headline.
Alec, Michael, I want to thank you both for your time today.
Thank you.